Today we're going to tell a story about the Silicon Valley Global Fund Banking Group and how we paid the way, the sheeple, and how out of this will come the first no-interest treasury bond, and how this is going to happen and how we got to where we are today. So let's just start at the beginning. You can stop and read this, but I'll try to move through it fast. Silicon Valley Bank is the second largest bank failure in U.S. history. The vast majority of depositors had balances that exceeded the federal insurance limits. Remember that, okay? Now, I've always been fascinated by this story because of this. That Friday, when Silicon Valley Bank was bankrupt, there was all kinds of talk that people were going to receive 82 cents on the dollar, okay, on that Friday. And hedge funds and private equity were cold calling the people who had their deposits there and offered them 60 to 70 cents. That's how they felt. And that was Friday. Then when we wake up Saturday morning, guess what? The bank is bankrupt. There will be no bailout. There will be no, selling. There's no 82 cents. It's totally bankrupt, okay? And the amazing thing is that all SVB depositors, insured and uninsured, will have their access to their money starting on Monday, March 13th, i.e., everyone got bailed out. And then you sit there and you say, now, why would that actually happen? Well, that's because SVB had the Global Fund Banking Group, which accounted for between 40.5 and 41 billion in total loans. This represented over half of Silicon Valley's $74 billion loan portfolio at the end of 2022. Now, I know it's been 2 years, over 2 years, but if you remember, everyone was saying that Silicon Valley Bank, they mismatched on their duration on their CMBS portfolio, which was $90 billion, which was marked down $16 billion, 16%, and sold off, okay? So it had literally nothing to do with CMBS. It had everything to do with the Global Fund Banking Group. This $40 billion was hard to sell. And you say, why? Well, this group served approximately 50% of all U.S. venture-backed technology and life sciences companies, 50%. In past statements, Silicon noted that it served 65% of all U.S. startups in the mid-2010, although this spans all banking units, not just the GFB. Now get this. They had over 37,000 startups by the end of 22. 37,000, and it was global. Now, they've never really released all the data, but I've been following this for 2 years, 3 months. It seems there was 23,000 in the U.S. and around 14,000 around the globe, okay? And by the way, everything was handed over to BlackRock. Oh, shocking. And they were unable to sell anything, okay? And they tried to sell the European thing. There was zero bids. Now, we're not here to talk about this portfolio, okay? But there is one company inside this portfolio that I want to talk about, because now we're going to see how big this really is. And it's the Circle Internet Group, which came public in the last 6 months. And I think it came public at 31, so these people made a lot of money, all right? Now, Circle was founded in 2013 and became a vital piece of digital financial infrastructure. The company emphasized regulatory compliance, transparency, security, partnering with leading banks and holding reserves, mainly in cash and short-term treasuries. That's why what they owned and what they offer everybody is called StableCoin. Now, look, we could talk about this global funding group and what they did and how they did it, but that's not the point of this, okay? But what is the point is that Circle was heavily affected by Silicon Valley's bankruptcy because it had $3.3 billion in reserves deposited at Silicon Valley Bank at the bank's failure, okay? And as we already saw, the FDIC guaranteed it all. And these guys, we literally gave them $3.3 billion, which of course is worth a heck of a lot more today. So who owned Circle when SVB went bankrupt? Well, here they are. They were the largest shareholders and sources of private funding leading up to Circle's IPO. Now, the IPO went public through traditional IPO. It was priced at 31, surged 168% on the first day, and they raised approximately $1.1 billion, and which valued Circle around $6.9 billion. And about 60% of this came from existing stakeholders rather than new shareholders of the company, a structure rarely seen in IPOs and reminiscent of the Facebook IPO of 2012. Circle had significant interests like ARK Investment Management and BlackRock indicated plans to purchase large stakes in the offering. And they had explored going through a SPAC, and guess who that was with? Oh, Sachs and Chomp, but it couldn't get completed before SVB went bankrupt. So why do we care, and what does it mean today, okay? So the reason that we care is that StableCoin is going to be, as we know, backed by U.S. Treasuries. And as we know, this administration is determined, okay, to change the rules of the game. And what rules are we talking about? We're talking about interest, okay? We have the debt, people. We know we have an issue in our hands. We can inflate our way out or whatever, or they're gonna try to figure a way. And this is what I think they're gonna try to do, all right? So first, we already know from the Moran paper, they're gonna try to have a forced conversion on the 3 and 10 year, and get them into zero coupon 100-year bonds, all right? We also know that we're going to tax the interest that we pay on our bonds that are held away from us in other countries, all right? But that's not good enough. We need another methodology. So I want you to think about this for a second. Here we are, and then we have StableCoin, and it pays, quote unquote, no interest. And as the senator from Tennessee said this past week, this is why we're doing the video, the new Genesis Act is legally required to be backed one to one by U.S. Treasuries. Here's the catch. You don't earn interest. The issuer does, i.e. StableCoin. You take the risk, they take the profit. Welcome to the future of fintech, public risk, private gain. I'm shocked. So it would seem that the plan is pretty simple. We issue zero interest rate treasuries, 1-to-1 behind StableCoin. StableCoin then is bought by people, and the more StableCoin that's bought, the more treasuries we can print with no interest on them. The Genesis Act that we just passed basically makes StableCoin part of the U.S. Treasury. It is part of the U.S. Treasury. And by law, it must be backed by U.S. Treasuries. But it doesn't say what kind of U.S. Treasuries. So what I think it's going to be, a Treasury that has zero interest on it, none whatsoever. And then pumps the, what did they say in StableCoin? You can make a transaction around the world in 1 second for 1 penny. What do you think? Like and follow, and tell me.